Yeah, good morning, everyone.
No, no, no.
Okay, good to have you, beautiful people, joining again today. My name is AJ. We've been meeting here over and over, which is great. It's finally coming to an end. It's good again to see and have you all join in. I can see you're already dropping comment. That is awesome. We are happy to have you join in today. And this is NTEEP 2023, and it's organized by Nonpro Technologies and powered by Africa's Business, Ubuntu Soft EU, Ashley's Collection, Eduzam. Of course, we are happy to have you being part of this project. Now, what this NTEP focus is to provide entrepreneurs, especially startups in Africa, with the right training and mentorship, and of course, access to tools, digital tools to uh, promote your businesses online. And today, which is of course almost a day to the end of this training, we have one of our amazing speakers for today, who is Kel. We'll be having him taking us on accounting, contract, and taxation, uh, Mr. Iken Nebo. And he is,
Yeah,
of course, the founder of Kel's Nebo Interior. He is also a member of Africa's Business. Of course, Africa's Business is no longer new to most of you. So he is also a member and, of course, an experienced accountant. So who else would take us? And one thing to note, he has been with us for a while now, and we are happy to have him with us as a speaker. So, Kel, over to you if you can hear me.
okay. Yeah, good morning, everyone. Yeah, I'm really grateful being here, and I appreciate being on air with you guys. So, I'll be taking you guys on accounting and taxation and also contracts. So, we need to first of all know what is accounting. Accounting is the process of measuring, processing, and sharing financial and other informations about businesses and corporations. When you talk about accounting, it's not just keeping finance, it's basically bookkeeping. You can't start a business without having records of your sales, your daily sales, your day-to-day sales, your expenses, returns. If you're doing a service, if you have a servicing company, to have all those things together. That's what really makes you this your heart in terms of your business. Okay, you're growing or you're going down. Without a good accounting structure, you're just there. You can't get benefits from companies or corporate bodies or even your friends. They want to see your track records of how you spend money, how you keep your financial records. So we'll go to the next one. Different types of bookkeepings. There are different types of keeping. Number one, this is cost accounting. Cost accounting is the process of assigning cost objects. The word there is cost to cost objects. That typically includes a company's products, service, and any other activities that involves the company. Number one, if you want to talk about cost accounting, it's you waking up in the morning. Okay, I want to go into farming. Okay, Mr. K wants to go into farming. What will it cost me to do everything inside of that farming? That's where your cost accounting comes in. That is the cost to cost object. You must know that you can't begin a business that you want to make money from and without knowing what it will cost you to do. Have that in mind. And once that is in mind, then you're good to go in terms of your financial statement. Then the next one is that's financial accounting. It is the branch of accounting concerned with the summary, analyzing, and reporting of financial transactions related to the business. Then, that is to say, when Mr. K have started his cost of what he wants to do, then he goes into the finance. Okay, these things I want to do, how much will it cost me? What's the running cost of it? What is that is to say, let's say you're a farmer, like Mr. K is a farmer. What will it cost him to get his logistics? What will it cost him to get his furnishing and fitting? What will it cost him to get his staffing? So this is where your financial accounting comes. And in that cost, what is the profit made on that cost? That's the financial aspect, because now you're dealing with the money itself. You're already in the process already. You're already making your expenses. Little profit is coming in. So you need to know, okay, financially, this money I've spent on, am I making profit? Am I not? Or should I still continue based on the cost of cost? That's the first one, the cost accounting. Then we'll go down to the third one, which is manager accounting. Manager accounting, managers uses accounting information in decision making and to assist in the management and performance of their control. Some common areas of management accounting in cash flow analysis, budget forecasting, job costing, inventory, turnover, and margin. So after your cost of costs, you started the business with finance, you're already making your little expense, you're already buying your stationaries. Then you need a report on all those expenses which you've made. That's where marginal accounting comes, because it's mostly used by your internal audit if you have a big firm. But you, as a personal business person, you need it for your own self. You might use this report end of the year or in every 6 months of your business to know how far you're going, if you're on the right track, or you have a deficit, or you're having a surplus, or you still have a debt incurred you need to pay. So this is where, in this particular aspect, you don't need calculation in it. It's from the reports you get from your cost of costs and from your financial, you merge them, so you give yourself an analysis. Okay, I am doing better, fine. Should I go further and pay my taxes, or should I employ more people to get my business going, or should I get a tractor to till the ground, or should I still use my labor, my dad's labor on it? So that is where marginal accounting comes in. And thirdly, the most common one everybody know about, petty cash. This is this is a retail kind of sales. The version of day-to-day transaction. You don't need to have like a big organization. You can even start from a little room to achieve this petty cash. That's why it's called petty. It's your day-to-day transaction. Okay, Mr. A comes to your shop, he buys a tin of milk from you. You register it as in and out. That's your debit or your credit, so that you can balance your petty cash. And in petty cash, we have two types. We have the one column and the two column petty cash book. Why is the one column? The one column is specifically for just you. Okay, I sell milk. I record it as milk credit. I debited the same milk credit with date of sales. Why you use this second column cash book is for your bank reconciliation. For an example, A comes to my petty shop, buys a tin of milk yesterday, and tells me he's going to do transfer yesterday night. So on getting home, on getting to his home, maybe there was no network. He did the transfer as at today. But on my petty book, I've registered it as at today. So I get to the bank. Okay, I brought out petty cash. I'm seeing a balance of, for example, 300 naira. I get to the bank, I'm seeing 200 naira as at yesterday. Because one thing you should know about accounting, it goes with dates. The date goes a very way. If you're recording, record as at when cash gets into you. You don't record after. You record when cash is in your hand. That is when you record with it, and that is how your bank verifies. So I get to the bank. I'm expecting to see 300 as at yesterday, but I'm seeing 200 naira. Meanwhile, I'm having a balance of 100 to reconcile my petty. So that is when the two column comes in. So you need to reconcile. That is when you reconcile your bank statement and your petty cash book. Now, what do we call it in accounts? Counter entry. You counter it. So when the bank checks it, what the bank does is that they balance you as at that day the cash got to them. So you need to adjust that payment which you got to today, not to yesterday. So that's why you use the two column cash book, not the two column cash book, but the one column petty cash book. If you're starting on a low scale, but when you're involving your bank, you have to use a two column cash book because you must always do your reconciliation and you must always see this difference in it. So the next slide, this is where this in every business. This is the heart of it. Taxation. What's taxation? Taxation is the imposition of compulsory levy on individuals or entity by government in almost every country of the world. Taxation is used primarily revenue for government expenditure. Through it can serve other purposes as well. Taxation. Nobody should avoid tax. Tax is what grows a country, and tax is levied from the government because government owns the land. You only own the building, but the land on it is being owned by the government, so you must be taxed on it. Next slide, please. Also, taxation is remained a controversial phenomenon. Most nations, especially developed economy, cannot do without the imposition of taxes on the citizens and corporate organizations. Because without your company being taxed, some little benefits which should come to you as an entity or also as an individual, you can't get it because it's through you the government make money. So once you're making money indirectly, the government are making money. And also for tax can be imposed on an individual or a business or entity, there are two things needed to put in check. Before you go into your being taxed, after you as a manager have checked your managerial costs, your managerial accounting, saying that okay, you're ready now to pay tax as a manager, as a CEO. Now, okay, you've checked. I'm making this so volume of money. I need to protect this my business. And the only way to protect this business is I need to identify the government. And identifying with the government, you need to pay taxes. So you invite a tax officer, and there are two things he needs to check before he gives you any amount to pay, which is one, he needs to check your year of commencement and your year of commencement first of all. Because year of cessation comes in when you're done with the business. Okay, you don't want it anymore. You go away with it. But your year of commencement governs how the taxable profits of a company will be determined in the first 3 years of business. That first 3 years of business, basically, I'm saying it based on Nigeria. Their laws, tax comes with law. So every country have their own tax system and the law governing it. So Mr. K now feels it's okay. He calls in a tax officer. The tax officer comes in and he tells him, give me your statement. Which year? He asks you a question. Which year did you business? You can tell him, okay, let's say you started your business 2019 and you've been running it 4 years. That was 2019, 2021, 22, 23, 2023. He will ask you for your 3-year statement, your profits making for 3 years. That's from 2019, 2020, 21, 22. He's not going to tax you on the 2019, your year of commencement, because in tax, we see it as that's the year you face a lot of challenges. Maybe you face a lot of you're not really sure about how far the business will go. You're not even sure, okay, if you will continue on the business. So you're not taxed on that 2019. On the 2 years, you've made profits on. That is when he works on your profits and he gives you a percentage of your tax, which is done by the government, not the individual. So your year of cessation, if your year ended, stays at the first, because every calendar year is 31st. It's only February we have 30 days, September, then February 28, 29 days. But once your business ends on 31st as cessation, the period of 12-month period would also be completely excluded from tax. Apply mostly when you shut down your business. So as a business person, once you start paying the tax on your date of cessation, as you're no longer interested, that last year that you're using to close down the business, you're not being taxed, because they feel it's not like 2019 when you started. You're trying to know everything about the business. Then 31st, you're closing, you're trying to sell off some of your equipment. Maybe you're laying off staffs and you're running a lot of expenses to lay off staff. You are selling your machineries, like okay, if you into egg, you're selling your crates, you're selling your minivan. So you're not being taxed on your year of cessation. So your year of commencement, that first year of commencement, you're not being taxed. And that year of cessation, you are not being taxed. So let's go to the next slide. So basic rules in calculating taxation. Then when Mr. K are finally there about, okay, these are the 2 years I'm being taxed on my commencement, the tax officers then comes in with a rule, that is PYB, preceding year. A preceding year basis means the assessable profits of the previous month's accounting period is subjected to income tax. That's to say, I'm now making money. I have staffing. I have workers. I have like 6 to 7 workers. I'm paying them their salaries every month. Then the tax officer will collect the payee. That's the money, the salaries you pay your staffs for every month for that 12 calendar months. And there's a percentage being given to them by the government. They used to ascertain that amount on that PYB. So what that PYB stands for is we have 4 years before election. In that 4 years, you'll be taxed on 3 years before election. You will not be on the 4th year of election. That 4th year is your time. You have the right to tell the tax officer, okay, this is election period. I don't want to be taxed on this 4th year. Let my taxation end on the 3rd year of business. There should be carried forward on 5th year as a year. So it all depends on you. That's why we have the election year. Right to election means a taxpayer can choose to be assessed to tax on an actual year basis profits for the 2nd and the 3rd year. That's for a new organization. But if you're already working or doing businesses part-time, you'll be taxed from the 1st, 2nd, and 3rd. But if your state is exempted from taxation because of the challenges you might have faced, so you'll be taxed on the second year and the third year. Some might tell the tax, okay, the fourth year, tax me on so and so percentage. He might tell you it soon balance on his account that it will be done on the fifth year, the normal year. The next slide. There are two types of income tax: end and on end. End tax specially refers to all incomes that emits from a trade, businesses, profession, vocation, or employment or exercised by an individual. End income comprises of profits, salary, just like PYB, salary, come the salary, wages, bonuses, commission, pay as you earn. That's where your PY, payee. Those of us in Nigeria who are staffs, we should all know what you must just have your payee, and it's done every month. You go to the bank, whatever bank you are, they've already given you the percentage you're going to pay for the tax, down to your staff. All your staffing must be involved in paying of this income tax, because what it does is it goes. You will see that as we all move down to the next slide. But what this thing does is it gives the company confidence about themselves, their relationship with the government. Because I said earlier, the government land, the only thing you own is the building, and your tax on that building on that land. If you have a car, your car is on the land, you'll be taxed of that car on that land. So we have the on-end income tax. On-end income come from source other than gotten businesses or reward or services end. Examples of such on-end income includes royalty, trademark, parent income, client rights, rent, dividend, gift, inheritance, bequity. Bequity literally means like a solicitor trying to hand over something. That bequity of yours, you're like a next of kin. Quote on end VAT. That's every value supply chain. That's value added tax, VAT. Well, the effect of this on end income is if, for instance, Mr. K now is already running his businesses, he has his staff, he's paying their payee, their end income, because they are earning from him, so he's paying their payee. The facilities on the land, that's house, his diesel, he needs to buy diesel if he has a farm. Okay, I need to buy diesel. But I go down to the nearest station, gas station, collect their voucher. On that voucher, there will be a VAT on it. You didn't earn it based on salary, but you earn it based on supply chain, because transactions have gone from one point A to point B. So you must pay VAT. Even we as contractors, okay, I go to a client, we discuss on business, I give you my performer invoice, I put my VAT on it. That VAT, I'm like, okay, based on, I put it, okay, 20% off the total amount. That's the VAT. We must pay, or we negotiate to pay the tax. So that kind of tax is not really imposed on you directly from the tax office. It's imposed on them. So those payments, they are the ones to pay to the tax office. You're paying a portion of it because you are using those facilities for your own company. You buy your diesel, you pay your VAT, you repair your diesel engine, the the maintenance manager that comes in, he gives you a VAT that you pay. Normal, you go to ShopRite, you buy biscuits, it's under your receipt, VAT. It's not that you earned it for salary. So also reasons for taxation. Tax are imposed used not just for revenue generation, but to accomplish various economic objectives. Tax is imposed in order to achieve the following objective by the government. The government owns taxation, no individual owns it. Any individual that owns a company auditing, it might just be an audit firm, but the tax money itself goes to the government. That's governmental services. Tax can be levied to cover the cost of administration, internal and external defense, maintenance of law and order, as well as social services required by the citizen. You have the police, you have your customs, you have your ministries, you have your ministries. You also have other parastatals owned by the government. Where do you think they make this money from? It's the money you pay through taxes. They pay all those things. You have your security, your police are there, your army are there. They are being paid from those money you pay to go. That is where government channel it. Imagine you don't have your police, you don't have your armed forces, you don't have like your what they call it, okay, like an agriculture, your bank of agriculture. You don't have your banks of industry. Without this money, you can't access loans from them. You can't benefit from the government. Someone can just come up one day and do away with you, and he goes free because there's nobody to hold accounts for it. So, secondly, support companies. Taxes are instruments used by governments to protect companies in their infant stage. This is done by reducing specific tariffs, which will invariably reduce the cost of production relative to imported products that may be subtitles of. What this implies is, for example, right now the whole world, we are all looking for the cancer. Imagine you have that cure in your hands. You won't pay the normal tax the pharmacy companies are paying. Government will definitely reduce the level to a minimum amount, where because this kind of products are something that helps the race. Those who are sick can get treated. Then you as an individual who owns such organization, you definitely make a lot of profits because they will have some taxes for you. There are some payments you won't make. It just goes off. Then also is harmful products. That's the reverse case of support of company. Harmful products. Taxes can also be used to discourage the company, the consumption of dangerous stroke harmful products. Yes, something happened that was like, for an example, something happened that was 2 years ago in Nigeria, to be precise. Federal government came in and said, okay, the use of what the benylin and codeine, for example, should be stopped. At the long run, the usage was still much. What did government do? They had to increase VAT tax, their tax system on them. Both the beverage company, that's the MBL, the beer and the stout and so on, they had to increase it so that all those, it will be specific for people to use. It will not be used generally. So they use tax to control harmful products like your acid. If you want to go get acid now anywhere, the prices are just so high because that's the government can use to control some harmful products that are being used in the society and the society. So also control importation. Taxes are employed to control the importation, production, and consumption of certain goods and services. They are preventing dumping. This can be achieved by increasing tax label as such goods and services. So it's more or less like harmful products. So taxes are used for good purposes generally, and is always taxed by the government. Is a tool of government used. This is a government tool used to generate money for themselves and for us, because we are the government, we are the people. So we need to pay so that those on top in those parts use for us. Next slide. And also redistribution of wealth. These are important instruments of government in the area of distribution of wealth and income among various income earning through progressive tax system helps to reduce income inequality. What does that mean? You earning, you're paying your taxes. You need your child is in school and you need money to pay. With your tax record, you can apply for a school loan. Like down here in Lagos State, if you want to go to a government school, your parents bring out your tax, their payee, or any which way there is in paying to the school. That instrument, you as a student or as a child of that person, you are not paying anything. Every year, your parents pay their tax receipt and show to the school. So even your health insurance, if you go to any federal, if you're a good taxpayer, you bring out your receipt, you'll be treated. Highest, the value of your tax might not sum up to the amount of drug being given to you or something, but at least they've reduced some stress off you because you've been paying your tax. Counter inflation. Sorry, taxes are also used to counter by reducing volume of purchasing power. The key word there is the power. For example, I want to go to Dangote to buy fertilizer. Those fertilizers, we all know is used for agric purposes. Instead of government charging me so much buying power to Dangote with my tax receipts, everything I'll be paying on tax. If that pH a bag is 8,000, my purchasing power might be at the rate of 10, and I can give in a credit unit of almost 200 to 300,000 and just take goods from him like that. I'll be paying on sales due to I'm recognized by the government. I have nowhere to hide. So to get their money back is no issue. So it's like an instrument for trust. Once you pay your tax, trust. People, corporate of the bigger ones who love to do things with you. You can for loan from Bank of Industry. And the only way you can seek for loan from Bank of Industry based on Nigeria is you must tax record, because you're now going to back to that government whom you've been paying to collect from them. They're not subsidies. Tax can as well be used to provide this in favor of the first sector of the economy. It's just like what's happening right now in Nigeria. That's the crude oil. Now we're talking about removal of subsidy. Those subsidies, those companies that give subsidy are companies that pay their tax up to date. So there are particular amounts they remove off for them. It's just like Mr. He's doing all those paying his tax loan to get fertilizer. And accessibility to the fertilizer is very far and it will cost him so much. What do government do? They subsidize for it. They tell him, okay, the vehicle you're going to use to bring in those fertilizers, the cost will be on them, to be on the government, because you're a taxpayer. If it's from not anywhere to any part of Nigeria, they will help you handle the logistics as long as you are due to date with your tax. Another reasons for taxation, national debt. Another important reason for imposition of tax is for government to generate resources that could be utilized to serve national debt and provide retirement benefits. That's your point. Nigeria we have debts or a country have debts, it's still that same taxpayers' money they still use to pay to offset all those debts. You can't steal from the government. You must give them their money. If you steal from them, it's a very big offense. So the best thing is, no matter how little your business is, as long as you're making profits, as long as you are making profits, try to pay tax. You are not dashing your money out. You are indirectly saving a fraction with the government, so that anything comes up, you can easily go to them and you can access money from them. That's why most people will tell you, government, they can't help you. Yeah, see, pay dates, take your files, go to them. You will get what you want. So taxation is like the heart of everything. You make what you don't eat it alone. You need to give them, because government owns the land. You only own the building. Even the car is on the land. The boat you're using for your fishing business is on their water. They own that sea. So the next slide. There is invoicing and accounting. Why I used TallyRip 9 is I've used it before. It's an Indian company that owns it. So where I worked, that was the software we used. We have Pitch 3. There are so many softwares all over. But why I prefer this TallyRip 9 is it's not just a software you download on your phone and it's done remotely. You can have your company based at Oshudi and you're in London. You can access all your financial records, your inventory, your in and out, your sales, your purchases, down the balance sheet to your P&L. And also, I really want to add, in your leisure time, you can Google format for profit trading and loss accounts. It's a format, is on Google, is on every online. Why that trading profits and loss account is like the best for a contract, if you're a contractor. That is where you can know how much you're making from a particular project. Because in there you have your opening stock, you have your purchases, you have your carriage inward, you have your carriage outward, you have your expenses, you have your depreciation. So as a contractor, based on, okay, you're into building, you up your quotation, they give you a job, of, let's use 10,000. You open your P&L, you draft out your P&L. Your opening stock is your 10,000, which you have. You go to the market, that's your purchases. Then the carriage inward is the person inside the shop bringing out those area, loading it inside your truck, because you must pay them. You have your carriage outward. Inside those your carriage outward, there might be damages, and they will still carry it in back to those shops. And those labor, you have to pay them. That's where you have your carriage inward. With a good P&L as a contractor, for starters, cost too. So you need it, because end of the day, you can finish a project and you're having a big loss. You're owing your workers. You're having issues here and there. But if you have a good structured P&L, you must definitely know your balance brought forward. And that balance brought forward is indirectly your profit, if it's on minus or if it is on plus. So that's why I still prefer this TallyRip 9, because it ascertains all those things for me easily. What later I just do is I just key in money used on the P&L ledger on the system, and it drafts every expenses for me down and gives me my balance. So in every business you do, you just must have a good sense of accounts. You don't need to have it, because if you're going deeply to the professional level, that means you're trying to audit that's the big organizations, the government accounts. But you as a little pet owner, you need to have all these records. You need to pay your tax. Once you start earning, you start having profits. You have like 2 or 3 staffs. Look for a tax officer. He gives you your payee. You pay your payee. You pay yours. you're on end, you pay, keep your receipts, you attach them based on your company. So if anything should come up, it will be easy for you to assess them, your benefits from them. I believe with this, it should go a very long way for every individual and every donor. So is there any question I like?
Thank you, Mr. Ikenna, for the wonderful presentation. There are already some questions lined up. Can you hear me? Mr. Ikenna, can you hear me?
Yes, I can hear you.
Okay, great. Our first question is from Naomi from Rwanda. The question is, what do you think about the future of Africa economy based on unfair taxation systems in some African countries?
Based on unfair taxation.
Yes, system in some African countries. What do you think about the future of Africa economy?
Yeah, what I think about the future of Africa based, I I still I always make statements. You cannot just be taxed just like that. Every tax officer tax you on how much you earn. They don't just tax you like that. You are taxed on how much you are earning or what's your profit margin for that year. If you're making a profit end of the year, you're making 300,000, 200, you be taxed on it. The only where this question right is on what percentage are they being taxed on in Rwanda? The only problem is let the tax percentage be reduced and the tax law, because government that writes this law on your taxation. So my own point of view is let the tax law be fair and let the percentage be fair. Even without you pay your tax, you pay your 10% as your tithe. That's your tax. So those it should be reduced. That's the only thing I would just say. It should just be reduced so that people can easily pay their tax and also gain benefits. And it all depends on the resources in the country. Maybe they don't have a lot. So the only way they can generate income, that's the people and the strict taxation.
Thank you, Mr. Ikenna. There's another question from
You're welcome.
Tabaro from DRC. The question is,
Okay.
the question is related to multi-taxation, and the question is, what can a startup do when it does not benefit any protection from the government and several government offices come to collect tax?
That's where the person is getting it wrong. Has he or she gone to the tax office? Like down here in Nigeria, in Lagos, we have the LIS, that's the Lagos Inland Revenue Service. Then we have the FIRS, that's the Federal Revenue Service. Have he gone or she gone to the tax office with his or her receipts up to date and have not gotten any benefits? If you have not gotten any benefit, then you can sue your government. Once your tax is up to date, you can sue them and they will give you your benefit. Because the problem we are having is how to go about it. Once you pay tax, that's the main major problem, is how to go about your benefits. So once you have your tax, something why government will deny you, you have to go to them. We are not like in the advanced world where they have a system whereby you can log in to see how much you're paying. But if you don't have, you do it manually. You go on with your documents and you go to the office. They will definitely answer you.
Thank you, Mr. Kenna. Another question from Frederick. The question is from Kenya. What are the common business taxes available?
The common business tax is available. Down here, you have your payee. Your payee is the most common one. Your business tax, that's for you.
Okay.
It's your payee. Then the other one might be the ones imposed, maybe like down here, if you have a shop extension, you have to pay tax for it because it's still part of advert. and co. So it all depends on what they have over there. Like here in Nigeria, if you put your signboard outside, you have to pay for part of that. But the most common one is your payee.
Okay. Thank you, Mr. Ikenna. Another
Yeah,
question from Blessing from Nigeria. The question, it's a scenario. She said, you said no matter how little one makes, one should pay tax. But I thought there was an announcement that if your annual return is not up to 25 million, you're exempted from paying tax in Nigeria. How true is it?
yes. No matter how little, basically what I meant by no matter how little is, as long as you own a company, you're, and you invite a taxpayer, a tax officer to your office, it's their job. They will ascertain it. Your job is to give them your statement for end of the year. Once they ascertain and they see, okay, yes, you are liable to pay tax, fine, they charge you on it, they tax you. But they allow you to still operate some years and they still back to still ascertain and still tax you on it. So it's not that you are in 30,000 naira salary. You're not the one paying it. It's your employer who pays that for you. He knows how he deducts those money from your salary end of the month and put it down to the tax office.
Okay. Thank you, Mr. Ikenna. Another question from Asuman. The question is, how do you differentiate a profit statement from general statement of the business, and can it be banked separately, or you bank transaction in one account, then separate later
So
manually?
I didn't get that.
Okay,
Repeat,
let me
sorry.
repeat the question. Okay. The question is, how do you differentiate a profit statement from
Okay.
general statements of the business, and be banked separately, or you bank transaction in one account and separate later manually?
No, okay. Unlike a profit statement, you can differentiate profit statements based on your capital, your expenditure. You less your capital, you less expenses, and your expenses can never be above whatever you put into your company. Then your bank statement, it depends on you do most of your transactions online, or you go to the bank via teller, you pay through teller. That is where you can differentiate your bank statements, because you're not holding cash, you're taking it to the bank. And when you take it to the bank, you fill in your teller or they give you a receipt. So it's those receipts you staple and you keep. Those things are your entries you use for your business. Them with your profit. And your profit margin, it's your capital less your expenditure. And what are your expenditure? Your buying of fuel, your vehicle maintenance, your repair and maintenance of equipment.
Okay, thank you,
No,
Kenna. Okay, the next question
you're
is
welcome.
from Naima. The question is, what is the difference between payee and VAT tax?
Yeah, the difference between the payee is your pay as you earn, and payee is paid every month. But your VAT is
Okay.
not paid every month. Your VAT is you go to mall. Okay, you have a business now. You want to go buy this. You go to the gas station. You're given a receipt after paying for the gas. That VAT on it, that's the on end. Because you didn't earn it based on profit. You earned it based on you're using it for your company. You're using it to settle debts or increase production for yourself. That's the difference between them. One is paid months, it's like salary, but the other you're earning it.
Thank you, Mr. Ikenna. We're taking our last two questions for today. And then one question from Faisal is from Ghana is, if you register a company for 2 years without generating revenue, how do you handle your tax obligation?
There's no need of you paying tax if you're not making profit. Then what are you paying? So like if you're doing your business for 2, 3 years and you feel you are ready, you must be ready to it. And you feel you're ready, you've grown to age to pay tax. You invite the tax officer. They all know the laws they use in ascertaining it. Once they check and they charge you, if it's not okay, they allow you to still trade for some period of time, and they will still come back because you've already put them in the notice. There's nothing to tax you on. They still allow you, but they are not removing those 2 years of trading. They will still back to it in addition to the other years they give it to you.
Thank you, McKenna. The last question for today is from no name, but the question is, when Federal Inland Revenue Services don't come for taxation, is it advisable to visit them to calculate your company tax for payment?
Okay. See, where federal inland revenue, where they come in first as a business, you are in the land, like Lagos, you're on the land of Lagos. So your taxes is paid to LIRS. Where federal really come in as an entity to you is it's just like your registration, your business registration. That's where you pay the major of the tax to. That's where you pay to the federal because they are the federal. But LIRS are the major key holders of the land, of Lagos land. So the money you're paying it to land, of Lagos land. So the money you're paying it to LIRS have a percentage they pay to FIRS. So the only way FIRS tax from you instantly is when you're doing your business. You must have your TIN number, or is it called VIN number or TIN number? You must get it from them before operation. So they work basically on operation, not in operation. So people that work in operation for taxation is that land, that's Lagos. If you're in Lagos, if you're in Abuja, they should have their own that collect the taxes. Like here, we pay to LIRS, Lagos Inland Revenue.
Thanks so much, Mr. Ikenna, for the presentation and the wonderful answers to the questions. Really
You're welcome.
appreciate your presence.
You're welcome. Thank you.
All right. And thank you to you for joining in today. And the past 3 weeks has been amazing with you all. We've come to the end of our presentations. Tomorrow will be a Q&A. The Q&A will not be hold, we'll be meeting on Google Meet. So if you, Mr. Kenna, you can mute your mic. Thank you, if
All right.
possible. All right. So tomorrow will be a meet on Google Meet. So the links we posted on the various platforms. You can also check out your email. It might be have sent to you. So just check out your email. And then tomorrow also before the Q&A, we'll be having a quick pitch deck presentation. So you need to get ready for that. Before the Q&A, we'll be calling in individuals to have a quick pitch presentation. So hopefully we look forward to seeing you tomorrow. On stage with us, we have Mr. AJ Smart. Mr. AJ, good to have you with us today.
Thank you, Jessica. That was another amazing session. Mr. Kell, that was a great presentation. I was just smiling, and just for the purpose, so you just know, Mr. Kell is actually one of our beneficiaries for the last NTEEP. So we are definitely looking forward to have many of you join on stage as mentors by next session or the other. So just so you know that we are building a community around NTEP, not just you come and go. We are trying to become a community. At the end of the day, we hope that you would become the drivers of this project. So, Mr. Kel, that was powerful. I was actually thinking that if you were a legal, tax consultant, I'll probably hand over our own work to you because it was amazing. Your understanding of taxation is really amazing. So thank you so much for the insight, that presentation. There was a lady who asked a question that seems kind of pan-Africanism kind of question. So let me quickly see if I can add to what Mr. Kell said. So coming to taxation in Africa, the issue of unfair taxation, the reality on ground is, honestly, I don't really think there is unfair taxation in Africa, except in some countries there is usually like double taxation, yes, where you have, in most cases, unlicensed tax collectors. In most cases, they are referred to as touts in some countries, which I don't really support that time using the term tout to anyone. But I feel like there are a group of people in most of the African countries that I've visited a whole lot, uh, because I've been to the four regions in the continent. And one thing that is common is that there are a group of people who usually work with government officials, but these people are actually not licensed, right, to collect tax. Some of them are working directly with government officials, some are working directly with local authorities, but these usually are not licensed by either the regional or the federal states to collect tax. But of course, since they remit part of their wuru, as we call it in Nigeria, meaning, this is not legit, right? Since they remit part of it, then they are allowed to, do their illegal activity. So there is something that Mr. Ikena mentioned. He said always consult a legal consultant, and you actually, in most cases, you have the right to sue the people involved in this kind of activities if you find out that you are paying tax and the money is not coming. uh, you are paying tax and another person is coming again to ask you for another tax when you know you already pay your tax. So I think he already mentioned that. I just wanted to clarify that as far as I know, I haven't really seen the unfair, because honestly, if you have stayed in Europe or North America, you will not be talking about unfair taxation in Africa. Let's be honest, because here we don't even pay taxes. Like there are some of you who have been doing business and until you don't pay. And one is that, in Africa we have these two wayo, that is we two get sent. So what happened is when it's time to file tax, we don't file the tax. There are times that you know that you may not even be eligible to pay tax, but because you refuse to file or to consult a tax clearance, someone to come, a tax consultant, as he mentioned, to check and know whether you are even eligible to pay or not, you may end up have to pay damages because you didn't. And because you don't want to go or consult a tax officer, at the end of the day, the touts or those, illegal guys, when they come, you will pay them anyway. And that is when at the end of the day, you will not be like, but I have been paying. No, you were not paying tax to the government. You were giving tax to street guys. So it's important to always get, like he has advised us, really get a qualified tax consultant to check your incomes and determine how much you have earned, and are you really qualified at this point to pay tax, and what kind of tax are you qualified to even pay. And that was really an insightful response that he gave to you. For me, I think that is all. But honestly, as for double and unfair taxation in Africa, I have personally paid attention to that. I'm not a tax expert, but I have paid attention to that on the continent. And to be fair, let's not use the word that other people from other countries want us to use to kind of always look down on ourselves. I don't think there is unfair taxation system in Africa based on, but I do know that we always take advantage of situations, and that is why you have different agencies want to collect tax. But if you are working with a tax consultant, you definitely probably won't have to deal with that. I think that is the way to solve that kind of situation. I just wanted to add to that and say thank you once again, Mr. Kell. We really appreciate you. And then Jessica, thank you. again, and Mrs. Osula. We are gradually coming to the end of NTEP. So, for some of you who will see your faces tomorrow, try to come because we have a lot to share tomorrow, and you would have the opportunity, of course, to speak. So, tomorrow is not just watching; you will be able to speak. So, we look forward uh, to. As for pitching, I already mentioned that by tomorrow, I will be taking you briefly on pitch deck because at the end of this program, we'll be expecting you to submit a pitch. So definitely by tomorrow, we'll take you on that briefly before we go on to our Q&A session. My name is AJ, and of course, I'll be handing over the mic back to Jessica.
Thank you, Mr. AJ, for the clarification and the wonderful insight. Mr. is also on stage, but before we go to her, I don't know if Mr. Ekena has any concluding statements.
Yeah, thank you. I've heard what you said, and which is just the utmost. So the best thing is, if you're going into any business, don't be scared. Involve them. They'll guide you through. Look for a tax officer. If you know anyone with basic insight on accounting, you add them up to your business and watch it grow. Money is not lost. It's there. Thank you.
So let me also have my beginning words at the end of the session. My beginning words would be, if we are not going to take care of our accounting and taxes after this presentation, after this most encouraging presentation, then really I don't know. So please take care of this very important topic. And yeah, we will thrive with our businesses. Thank you. Over to Miss Jessica.
Okay. I don't. We can't. Jessica. Maybe she's having issues with network or maybe something. But I would just take us on a closing remark. Remember, tomorrow we will be same time, but not same place because we'll be on Google Meet tomorrow. You will be able to join in to also ask practical questions in general. And by that, tomorrow, pitch decks. And then finally, we'll be, of course, sharing updates on what the next phase of this project would look like. So we thank you so much for, staying out to this. We have 8 minutes already. As you go on your activities, remember that the idea here is for us to be a better version of ourselves and, of course, to be nation builders. And if we are going to be nation builders and provide employment to other people, then honestly, paying tax should not be a problem. So we say thank you for joining in. As you go, enjoy the rest of your day, and we'll see you tomorrow. Tell your friends and your colleagues. Tomorrow is a very important day, so you don't want to miss it. So from me and from on behalf of the NTEP, we say that will be it for now. Special thanks again to our speaker for the day. That was amazing. So bye for now.